Hello, everybody. I'm Toby Gennaro, and got a good-looking crowd on today. So let's do a sound check real quick as we kind of get the thing ramped up here for this morning. If the sound is coming across loud and clear, if some of you folks that are already logged in, if you can just let me know via the question box on your screen, just kind of give me an electronic high five and say, "Hey, Toby, I can see everything good." The current splash screen says live technical analysis, market movers for today, January 16th. And we'll jump in and get rolling here. Great, you guys are just Johnny on the spot. Thanks for doing that. I'm Toby Gennaro, and I will be your presenter for the day. The topic for today is live trading with Nadex contracts. I'm going to be talking through a series of specific trade setups in real time that I'm seeing in the markets. So for those of you that are on the live webinar this morning, if you have any questions during the session, please do. Type those into the question box on your screen. I'll be asking you some questions as well. We'll try to keep this interactive. That's really the whole idea of these sessions. And so we'll be doing this. I'll cover 2 trade setups for the first 30 minutes, and then we'll go through some Q&A in the last 30 minutes, and that'll kind of cover and set up the hour for us. Good enough? All right. So just by way of formality, let me put up this risk warning and disclaimer. Leave this up for about 30 seconds or so if you can just have a quick read through this as you normally do. In brief, we provide education only, which means we do not give any financial advice. And as most of you know, trading the markets can be risky. It's not suitable for everyone, and you should seek independent professional advice. All right, everybody good with that on a quick read through? And just one more disclaimer here from Nadex. You can have a quick read through this one, and then we'll get started here with the content. All right, very good then. Let's get started. Now, to kickstart your trading every Tuesday, utilize this regular feature from the team at Trade with Precision, compliments of Nadex. And with so much going on in the markets each week, the question really becomes is how can we spot opportunities across multiple markets and multiple time frames, give ourselves an edge in the markets. So join us weekly for this very insightful live webinar where we'll focus on technical and trend analysis of a couple different trade strategies that we use across many major markets to try to answer this question. So let's go ahead, jump into some of the live charts and see what kind of trading opportunities we can find for today. And if you'll just give me a moment here to get my screen all set up so you guys can see everything. I'll be using a different program here for different software for the charts, just so I can move through these things quickly and get everything covered in the 30-minute time allotment that we have. But I'll be using a TradeStation platform, so we'll be able to see 2 time frames at a time, and I'll be able to cycle through these time frames, pretty quickly to help you guys understand, what exactly it is I'm looking at as far as the, the trade setup. And then we've also got the Nadex binaries up right here, so we'll take a look at those relative to, the trade setup that we have, and those will really be the 2 platforms. Nadex has put some time and effort and money and dollars into the charts on the Nadex platform, which I think are very good. The only reason I don't use those is they don't give me a way to have multiple time frames up simultaneously, so I can do instruction and you guys can follow me really easily. But in terms of trading, I really like the way they have the binaries overlaying the charts, and the price action makes it really easy to buy and sell the binaries and the spreads. Just by looking at those charts they have built into the platform. And on top of that, you get all of the data for free, which is a huge benefit because it just doesn't cost you a lot of money to trade those then. If you want to buy that data like we have here, it can get pretty expensive every month. So just a couple of tidbits there. I'm going to cover we're going to look at 2 charts, 2 asset classes. One is going to be the dollar yen, which is what I have up here. Then we're going to take a look at the euro dollar and a couple of setups, one long, one short. And I wanted to look at this one on the dollar yen simply because I don't see this too often, but it does occur in a very repeatable pattern. And this one right here kind of has both a breakout setup potentially, and also a potential trend flow setup as well on a couple different time frames. So as you see right here, we have all the moving averages, the 200, the 50, the 20, and the 10 all flowing to the downside. We have lower highs, lower lows, everything moving very nicely to the downside. We're starting to get some divergence, some bullish divergence here. So we might get a bounce here, at some point, maybe on a retest of this level down around 110. But for right now, anytime we get these sell candles in the zone, that sell zone right here between the 10 and the 20 period moving average, if we get a breakdown below this level, and the low of that level is 110.63, if we get a breakdown through that level, then more than likely that's going to be probably another retest of that 110 level and potentially maybe even a lower low at that level. So we have a setup there, and then also on the 240, we've got a bearish candle in the sell zone that is already set up. There's already been a breakthrough to the downside. It moved up to retest that and almost setting up like another bearish candle in the buy zone. So we're looking for these setups across 2 time frames. So we got that across the 240 and the 120. And then looking down at the 60-minute chart, we actually have a swing high, then we have a lower high right here, and we actually have a flat level setting up. We have 2 touches at a very specific flat level right there around 110.60. And so if we get the price action moving down again toward that 110 level again, we might get one more bounce that might put in a lower high and then another test. So we might get 3 or 4 tests at that level before we actually get a breakdown to a lower level. Now, anything can happen on some of these setups. These are just, probabilities in what we're looking at. But since if we do get a retest of this 110 level right here, more than likely that's going to set up some pretty strong bullish divergence across these charts. And what I mean by that is when price puts in an equal low or a lower low, if the indicators like the MACD and the RSI, if they don't put in a lower low as well, then that is bullish divergence. Okay, so right here, like on this lower low right here, we have lower low, lower low, lower low. And you can see that the low here, corresponding to the price action, is consistent with the lower lows made all throughout this trend right here. But as we start to get into the bottom part of this trend, you can see the trend is weakening somewhat because the lower low we get here, even the lower low here, tends to be a higher low from this low right here. And then we get even to another lower low, and we're still only back to a previous low. So when that starts to happen, that's called bullish divergence in this case, because price action is in a downtrend. And then we have the same thing that you can see right here with the lower low. We actually have higher lows from the previous lows here. And so if we do get another retest of this level or another lower low, do we anticipate that there's going to be some strong bullish divergence on the indicators here? And these indicators are kind of a checkpoint for me that says, hey, how much more does this downtrend have to run, in this particular move right here? Can it go a lot more, or maybe is it just going to retest this 110 level, and then we're going to get kind of a relief rally before perhaps the higher time frame downtrend starts to continue again. So these are kind of the things that I'm taking into consideration when I'm looking through these charts. Technically, that's really what I'm looking to do. So right here we have a 60-minute flat level looking to break out to the downside is what I'm thinking. And then as we move down to the 30-minute and the 15-minute, you can see that a little bit better. You can see those 2 touches right there, and potentially moving down for a 3rd touch at that level, at what point we may get a breakthrough at that level, or we may get another bounce. But if we do get a bounce off that level, more than likely it shouldn't break the swing high right here at 110.88. Okay, more than likely it'll be a lower high, which means we'll have a lower high here, a lower high here, and then potentially another lower high, and then a flat level with everything rolled over, the price action, lower highs, lower lows, moving into that flat level, and then we'll be looking for a break. And normally that break will be from the flat level, which is right around that 110, say 110.50 level for easy calculation, to the swing high level, which is 110, say 110.90, So roughly about, a 40 pip breakdown, which would bring us right down to around, say, that 110.20 level, which is really, a retest of the bottom. So usually when it consolidates, it'll move the width of the consolidation from the high right there to the flat level. That's the consolidation. So when it breaks, it's going to move at least that much further once it breaks out of this flat level. Let me just put in so you guys can see this and know what I'm talking about. Get you a different color there so you can see it. So that's the flat level that we're looking at. And this right here is going to be the swing high that we're paying attention to. And I'll give that a different color, like potentially green. And so those are really that's the consolidation zone from where the flat level first establishes itself, and then the retest, and then potentially another retest. Now, if it doesn't do and retest this level again, and if it breaks this level right here to go higher again, then that would invalidate the setup on the flat level that we're looking at. Okay, so if you guys want to know a little bit more about this, we do an advanced education series where we'll teach you these two trade setups, the trend flow trade and then the flat level breakout setup, all based on technical analysis, and we'll show you how to read through the charts and identify some of this stuff for yourself. But for right here, this hasn't really set up yet, so it's in the process of setting up. You can see it on the 15-minute chart. You can see these points very closely. See how close they are? They're almost exact on the dot when it touches that flat level. And then usually there will be a high point, a swing high within the flat level, and then it'll start to set up, potentially lower highs in a downtrend, trending back down into this level, and then potentially setting up that break. So let's go ahead. We're going to wait for more than likely a retest of this 110.60 level, and then potentially see some smaller candles setting up around that level as well. That will give us a pretty good idea with smaller candles pressing down onto that 110.60 level that more than likely an imminent breakout to the downside is about to occur. For right now, I really have no idea, so I can't set up a trade on this right now because it could break out to the top side and go higher. If it comes down again, then that gives me a pretty good idea that the market has rolled over once again. It's going to retest that level and potentially continue retesting that level before it ultimately breaks down through that level. So let's go ahead at the 110.60 level. Can't really get. We can take a look at some of the contracts, but they're going to change, drastically once if price actually reaches this 110.60 level, and that's really where we're going to engage. I wouldn't be buying a short contract until it actually breaks the 110.60 level, because that's going to be a level of support, and we want to make sure that it handily breaks that level in order to, get the trade to actually set up for us. So let's take a look at some of the contracts that more than likely we'd be looking at once we did get that break through that 110.60 level. More than likely, once price got down to that level, we're going to be shorting it at a lower value. And so what am I looking at here? This is the Euro USD. Let's go to the dollar yen, and then we have the 110.75, the 110.25. And since we're going short, we'll be looking at some of these ones. More than likely the 110.25 would be a good one. Even the 110.75 wouldn't be bad either. We just want to make sure that we can get something that we can have at least a 1-to-1 reward to risk, meaning we can short these at, maybe around 50, and risk $50 to make $50 is kind of the deal. And so the 110.25 is looking probably optimal for that as well. We might be able to sell that for around 60. And these aren't going to move as fast because they're weeklies, so they have 3 days on them. Because really we're looking at a chart that has, going back to this chart, the 15, 30-minute all the way up to the 60-minute. This could take anywhere from, at least on the hourly chart, it's taken 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's taken about 15 hours for this thing to set up, and we don't even have, price action bound down at the 110.60 level again. So this could take some more time to set up. but we're not interested in trading it yet because we don't have the setup actually complete. I've just been able to identify it early on. You guys can track this throughout the week. So on those weekly contracts, we have another 3 days on them, which should suffice. If we were to actually get a setup, say tonight, and another retest that 110 level, then I might look at something like maybe a 12-hour contract, something of that nature, because we're really going to have to give it, a number of candles once it sets up and then breaks down. These things always move in the direction of the trend a lot faster than they move against the trend. So you can see as these little candles set up right here on the trend flow trade in the sell zone, I mean, as soon as they break down pretty quick, and they traverse the upward move. Usually the upward move against the trend is going to be slow, and then once the setup happens to the short side, everybody piles in, and that's why you see these moves that are almost 2 to 3 times as long as the rally going back up into the 10-20 period sell zone. Can you see that? So we only got 3 candles here before we get a sell zone set up, and then we've got 10 candles going to the downside. So that's kind of what I'm looking for on the dollar yen, is another move to the downside. Again, if we break the high right here, the swing high at basically about 111, if we break that to the upside, then that's going to invalidate any downward momentum here that we're looking at. So let's go and take a look at the euro dollar. Just finished up the dollar yen. And so and I like to look at these from, the top down, meaning that I'm looking at a monthly chart. And so in a weekly to get, the whole concept of what's happening in the trend. And the reason I do that is for reasons like this. There's a swing high, there's a swing low that's met with some support down here. And then we have in here a Fibonacci retracement. There's a 62% level, there's a 50% level. These can really be key levels when the market actually sells off in this particular scenario, since there's been a downtrend. This is where the market can rally to this level because we saw a lot of bullish divergence here. We put in a new lower low, and all of a sudden we put in a major higher low on the indicators. So that was a lot of bullish divergence. You can see the big bounce that's happened off of there for about, 8, 9, 10 months. So this has taken a long time to occur, and we finally just got back up into that zone around the 50%, and there's also some other levels up around here with some prior levels of support that we need to be concerned with as well. And so not an optimal place to be looking for, another long setup, but there could be some more legs to this particular little run right here. And here we've got on the weekly chart, the 50, the 20, and the 10 all angled up to the upside. We've got higher highs, higher lows. That looks pretty good. We've got a little bit of bearish divergence coming into play right here. So that's something to think about. Here on the daily chart, we've got everything converging, higher highs, higher lows on the daily chart. Same thing on the indicators. Got a lot of overextension here from the moving averages. Usually that's an indication with large candles of a potential snapback into the moving average zone. A good move back would be right around this level, right around that 120 level, put us right back into the moving average zone on the 1020 for potentially another move higher. Well, what I'm looking at is maybe an intermediate move right here below the 8-hour chart. We don't have the price action back in the zone on the 480, so I'm going to move down one more level to the 240 and take a look at the 240 and potentially the 120. So right here on the 240, we've got a nice bullish candle right in that buy zone amongst the 10 and 20 period moving average. It hasn't closed out yet, so I need to wait for that candle to close and then for the next candle to form and potentially break the high of that candle, and the high would be 122.47. So if the next candle forming can break 122.47, then we have a chance at moving up to a new high, potentially breaking that 123 level. And so as I move down, here's the 120 chart. We already have a candle setting up. We have a breakthrough of the high of that candle. And so that's looking pretty good. I just need to wait for the 240 to set up as well. I can't use the 60 chart because the 10 and 20 period moving averages are crossed over in the wrong direction. I can only take this trade setup when we have a bullish candle in the zone and I have the 10 and the 20 period and the 50 all moving up in the same direction. Once they cross over like that, I want to move one time frame higher, which is what I'm doing to the 120 and the 240. So basically that's how that works. So yeah, David's saying trading requires patience. Yeah, what we're doing here is we're really looking for you know, the market to come into a zone where we feel comfortable and where the probabilities are most likely in our favor to engage the market at that point, and then potentially catch, you know, a bounce going in the direction of the predominant trend. And those are really some of the strongest moves that we're going to find is looking at that. All right, so so that's what that looks like. The trade isn't fully set up yet, but we certainly have it defined. We can take a look at the euro dollar and some of the you know, the different strike prices that are available. So looking right here, sorry, let me get in the right one if I can. I don't necessarily want to be using the weeklies because there's a little too much time there. I'd probably want to move down to something and look at maybe, you know, as soon as it broke that level, I'd be looking at something maybe like an 8 to 10 hour, something like this. And so the market is currently in that level of around 122, say 122.40, and we'll be looking for 122, let's see, where are we at? 122.40, there's one exactly right around that level. That might be a good one to consider. And since we'll be going along again, we would want something that would be, you know, basically something we could buy at least at 50, if not 40 or 30, or potentially 20, and then be able to, you know, take that trade going long and then have an opportunity for at least a 1-to-1 reward to risk going in the direction of the predominant trend. So that's kind of what that looks like. What else? Let's see. What else can I help you guys with? Taking a look at some of these other contracts right here. You know, we can look at, since we're going long, the 122.40 would be the lowest one we want to look at. The 122.60 would be another one that we can consider, and you can see your reward to risk, the farther out you go, is going to be much better. We can buy this one for a little less than 30 and have almost a 2-to-1 reward to risk. The 122.80, and the farther we go out, the question becomes is the price action going to reach that level? And if it doesn't, then you got to be concerned about that, because these things will go to zero. And so that's really the, you know, the thing that you got to be concerned about. So that's really the trade setup there. In looking at these, obviously we don't have the trade fully defined yet, but we have to, you know, identify these and catch them, you know, in advance, and be able to track them and stock them for, you know, for what we're looking to accomplish. So let me just wrap up here. Let me pull up the slides. I got one more slide to go through. That'll wrap up the trading. And then let me just get my screen set up for you so you guys can see. And so just in conclusion here, what Nadex is doing with these sessions every Tuesday is they're really just making an investment in your success as an investor. So what we did is we put together you know, an advanced education package presented by Traded Precision over 3 webinars, basically an hour each. You don't have to go anywhere. You can watch these from the comfort of your own home. The TWP team will be conducting these as live interactive webinars, so you have the ability, just like today, to ask questions about the content. You can work on trade examples and setups. We'll teach you all the ins and outs of the trade strategies that I've been using in today's session, and then you can get a better handle on the details of how to deploy and how to use these strategies properly. So this education package is valued at well over $900 if you bought it directly from us at Trade with Precision. But Nadex has essentially subsidized the cost for you, so it's a complete freebie for any Nadex client with an account. Pretty good deal for you if you're on this webinar. You can just contact customer service, and they'll get you tapped into that series of webinars. Also, a couple different ways for you guys to get in touch with us: phone and email. That's listed here. For any questions that you may have, you can ask me your questions right now, and we'll get a response to you. Just use the question box on your screen as you've been doing. Demo accounts are also available, just to provide you some familiarity with the contracts and what we've been talking about today. For some of you current members, if you'd like to begin trading again, go ahead and log into nadex.com, take advantage of the advanced education webinars. Certainly help to maybe take your trading to another level. If you're new to Nadex and you'd like to set up an account, just go to nadex.com, click on the orange box in the top right. It says sign up, and then complete your details. Someone from Nadex will respond via email to help you get started. Before you sign off, there is a short survey. Let us know your thoughts. If you want to hang on for the remaining half an hour, we'll go through some Q&A, look at some different markets. You guys can hang on for that as well. But other than that, we'll look forward to seeing you next time.